Help capture the history of our markets by contributing to the John Lothian News GoFundMe campaign to support the Markets Wiki Education history-focused video series and more.
I got out of school in May of '81, and that was a tail end of a pretty deep recession in the U.S. I wanted to get a job with U.S. Steel, but that got canceled because of the recession. And so I bopped around for a couple of months with some odd jobs, and then I got a job as a runner on the Board of Trade floor with Cargill Investor Services. And that was in September '81. Within a week of me starting to work was when bond yields hit their highs. They were trading over 15%. Two-year notes were over 16%. So it was kind of an auspicious time for me to start. After a couple of months as a runner on the floor, there was an opportunity to go upstairs into the back office in the accounting department. And I was doing the seg balancing every day for all the customers and all the house positions of Cargill. And, in those days, big Wall Street firms weren't yet clearing members. So they were going through houses like ours. And Lehman was one of our biggest customers at that time. They were very active, obviously, in bonds, but also in mortgage backs. And within a couple of months of me being there in the accounting office, they told us, hey, Lehman is going to be delivering $3 billion of Ginnie Mae certificates. So that's each certificate was $100,000. So that's 30,000 pieces of paper that were physically being delivered. And I remember a couple of guys, big guys, came over to our office from Lehman with a gigantic suitcase. And just like you see in the movies, with a handcuff around you and into the suitcase as well. And they brought it into a conference room. There were 4 or 5 of us. And our job was to open the suitcase and manually count all their certificates. So we were in there, for a full day because we had to count them more than once. We had to count them 3 times just to make sure. So, that was an eye opener as well. '87 actually was a very interesting year. I mean, obviously everything was still, for the most part, open outcry. Electronic trading had barely just getting their foothold. And a few things happened during '87, which I thought were very, when I was in London, I spent about 4 or 5 months there because they were super busy. So I was on the upstairs sales desk, and the U.S. markets would close. It would be about 9 p.m. London time. So most of the sales desk worked, just in daytime hours. And there were 2 of us who were supposed to work from 5 p.m. till 9 p.m. London time. It just so happened that there was one day that was really busy near the close for the stock and bond markets. And even though there were just 2 of us there, I think about 10 phone lines lit up at the same time. So you're handling 2 phones at once. And I'm on the phone with one guy, a local trader for one of the big banks, might have been NetWest or somebody like that. And I said, hey, we're going crazy here. Do you have an order? And he said, yeah, but just give me a minute. Well, it was so busy with other lines lighting up and the markets are moving that I figured he's got to think about this for a few minutes. So I put the phone down. I did not hang up the phone. I put it down. And in those days, if you don't hang up on somebody, they can't hang up and get a dial tone. So he was locked out. He was calling from home. So he had to literally leave his house, run 3 blocks to a payphone and call back. And I picked up that line. He said, yeah, it's me. Now I have an order. So that's the kind of stuff people had to go through, in the, open outcry and telephone markets. But London was very busy in those days. We had customers who were trying to arb the spread between CBOT and life because those bonds obviously were not fungible. Number one. Number 2, the bond futures in London did not have any daily limits. And I'll tell you in a second how important that was. But as we moved through '87, in late April, early May of '87, I actually moved to Japan. CIS was opening an office there. I was the office manager. We ended up setting up a 24-hour desk to handle business into the U.S. We had, I think, 10 or 12 people there. And we were handling, financial and commodity, everything, with all kinds of customers, banks, trust companies, commodity firms, oil companies, everything. We had to keep our phone lines basically always open because we never knew when somebody was going to call with a decent size order, and we couldn't take the risk of having to wait 20 seconds to get a hold of somebody in Chicago or New York. So our phone bill during those days ran up to $30,000 a month, just because we had to keep the lines open. We found a solution for that, several months later, but it was not a cheap place to be. But again, commissions were high back then, so it more than made up for it. But as you know, the night session for the Board of Trade started, I think it was in the springtime of '87. It was primarily aimed at Japanese customers. So in the summer of '87, the Board of Trade sent 3 of their top locals to meet up with their representative in Tokyo, who was Bill Grossman, and to go around and meet some of the big banks and just let them know that they're going to be in that pit at night and there's going to be liquidity. So the 3 locals were Tom Baldwin, Rob Moore, and Jim Hines. And so they first came over to our office in the Cargill building. We met with them. We gave them some introductions to some of the big Japanese firms. And they went around and met with quite a few people and just told them about what they're planning to do as individual locals to help support liquidity in the night session. And that went fine. We started to see some decent sized business, 500 lot, 1,000 lot orders from some of the Japanese customers. But then you fast forward to Monday, 1987, and stocks, the Dow fell 20% in one day, a lot of it near the close. And so on Monday night, October 19 in Chicago, which happened to be Tuesday morning, the night session opened and very quickly went limit up. So there wasn't a whole lot that people could do. At the same time that was happening, we had customers trading from Europe into Singapore, CIMEX, and they were trading the Nikkei futures, trying to get those trades done before the Nikkei futures in Japan opened up. And on Monday, October 19, the Nikkei futures, I think, closed around 19 or 20,000. This order went in. It was a market order, which is something that nobody should ever do, but that's what they did. A couple of different firms involved, different brokerage firms, and they got filled on the opening at a price of 5,000. The market ended up rallying the rest of the day and closed at around over 18,000. So that was one of the hits that happened on October 20th. And then about 4 p.m. Tokyo time, Life opens up. Life T-bond futures with no limit traded 10 full handles higher within a couple of minutes. So it was a very wild day on October 20th in the Asian time. It's kind of a good example of what happened before you had electronic trading, before you had 24, 23 hour a day trading. There's a lot of things that could go wrong or right. But there's just a lot of volatility in the business of getting orders done. The name was Akamai Trading, which was, later they changed the name to Jump Trading. But when I was with them, it was called Akamai. And they started that company shortly after the E-mini S&P started trading at the CME. And their focus was really the arbitrage between the E-minis on the screen and then the regular S&P trading in the pit against, cash baskets. So it was like a 3-way arbitrage. And in those early days, until things really tightened up, there was a lot of opportunities and they were, very, very good traders. This is, in the days of point and click electronic trading, before all the automated systems came in, which I believe was around 2003, maybe 04. And that really changed the game dramatically. So there's definitely different stages of the experience of electronic trading from the beginning to what we see now. Starting around 1990, there was a proliferation of futures exchanges in China and futures trading in general among retail traders, trading in local markets and also trading overseas. That ended in 95 when there was the Chinese bond futures and and all the exchanges were shut down except for three, which are the three that are existing today. But between 93 and 95, there were a couple of very large Chinese FCMs that were handling retail business. And they dealt with a lot of brokers on the street, including us. And the business was just overwhelming. Most of it in one lots, trading everything under the sun. And the orders would come in, we'd have like 20 or 25 or 30 phone lines lighting up at once. We had 12 people. This is back in Chicago. We had 12 people on a sales desk just handling orders from China. And we got overwhelmed, as did probably a lot of other people as well, because it was just small orders, just too many orders trying to get done, manually. So, this is what electronic trading, really ended up fixing, that we'd never be able to do the kind of volume without electronic trading. And we experienced that firsthand in the mid 90s. I started working for the CBOT in May of 2002, right about the time that they launched the mini Dow futures. Prior to that, they had the pit traded Dow, which was a $10 instrument, very wide bid offers. The mini Dow came in, we got market makers involved, and it was approximately the same notional value as the E-mini S&P, pretty close. I mean, you could spread 10 contracts versus 11, for example, and be notional neutral. And so we started to see a lot of pickup in volume in the mini Dow, people trading that either outright or making a market in it and hedging that against the E-mini S&P. So that was a pretty good run up in a fairly short order. But another interesting thing that we did at the Board of Trade, CBOT for a very long time, had gold and silver futures. They were tiny in comparison to COMEX. The Merck had gold futures in the 70s and early 80s, but again, COMEX was the main market. And at that time, in between 02 and 05 and 06, NYMEX was still pit traded. They did have a system, their own electronic system, but it really wasn't up to snuff. And so we launched a 100-ounce gold contract, put it, trading electronically with market makers and everything. And between 04 to 05, before 06, 04, 05, we gained like 60% market share within 1 year of the whole gold futures market in the US. So COMEX fell below 50%. I mean, there might be other things going on, but I always felt that was one of the reasons. Maybe that was the final straw that made the leadership at NYMEX decide to stop their system and join Globex. I don't remember the exact, if it was 06 or 07 when they did that. But once NYMEX went on to Globex, they recaptured their market share because they're the home market. Board of Trade was on the Eurex system for a few years. It was a good system, stable system. However, to control the volume of messages, they had this thing called netting. So if you're getting market data, you're getting a picture every 2 seconds. They reduced that netting down to 1 second, down to half a second, but it still wasn't live flow of every piece of data that was going through. And so that was an issue for the Board of Trade. And, after some discussions, leadership decided to leave the Eurex system and move over to the Live Connect system, which was a more advanced system by far. It was a good system, but Life itself, their main contracts were STIRs, short-term interest rates. So they were trading a lot of Euribor, short sterling, and stuff like that. And so they told us that when you start on Live Connect, you're going to be able to get as much volume done as possible. Well, the first day we went in there, the first day of Live Connect, there were definitely some delays in message and data traffic because I don't think we had any message policy in place, which we quickly fixed the following day. But their system was good, but it didn't handle the kind of volume of orders that you would see in stock index like mini Dow or in Treasury futures. It was fine, for STIR contracts. So we had to make some adjustments, which the Board of Trade did. And I think we're on Live Connect for probably about 4 or 5 years until we ended up moving everything over to Globex. While I was at the CBOT, even though I spent a lot of time on the mini Dow and stock index, I also spent quite a bit of time covering institutional clients in Asia. So I spent several years going back to Asia. Probably in the course of my life, I've probably flown to Japan, close to 100 times between CIS and CBOT. So I knew that place very, very well. They announced in October 06 CME CBOT merger. The merger closed in August of 07. And at that time, I was reassigned back to work for about a year or two with the stock index team at the CME. And then in 08, CME made a deal with the BM&F exchange in Brazil. And so I was assigned back to international. My boss was Bob Ray at the time. And, Bob said, we want you to be back in international, go down to Sao Paulo, open an office, and let's start to get some business coming out of Brazil, which we did. But also the CME made an order routing deal with the BM&F, whereby our markets were linked. Customers of CME could route their orders through our systems and trade into BM&F in Brazil. And that increased the liquidity of the markets in Brazil tremendously. Before the order routing and before U.S. clients were trading actively in Brazil, I was there on one trip in a broker's office looking at their screen, and the bid-offer spread in the Ibovespa was 100 points. Now, granted, the index is trading, at a high level. It was trading at 30,000 at that time, but you had a 100-point bid offer. And once order flow started to come in from the U.S., that bid offer eventually came down to 15 or 20 points, which is a fairly tight market. And eventually, after that, the BM&F decided to get out of their electronic system and adopt Globex. So they have their own version of it now, and it's done very well for them. Again, the evolution of electronic trading from where it was to where it is now, had a lot of major steps in it. Focus is to look at a variety of markets and offer limited risk trading strategies. So basically spreads, no open-ended spreads, in order to allow people to, take a view on a market, have a position on, and have staying power so that you can ride out the whipsaws that happen every day or every week. And so that's something I've always spent a lot of time on. I've put a lot of work into the website. I have a section that shows how time and volatility impacts spreads using 3D graphics. And then another section, basically economics and market analytic chart books. And then finally, the section on, the strategy. So I offer, a bunch of stuff for free, just as samples. And then if people want to subscribe, they can do that as well. I've been heavily involved in options really since going back to 81, 82. When I started working for CIS, I also started going to night school. I went to DePaul University in downtown Chicago to get my MBA in finance. And one of the classes I had there was on options. So I learned a decent amount in that class. But I really got interested when the exchanges started launching, options on futures. At the Board of Trade, first it was bonds and then corn. And I really got involved in it. And, before I was working on sales desks. So I went from being in the accounting department, I went down to the floor and worked on the bond options desk, handling orders for customers. Sometimes customers would ask for advice. And, probably maybe the best call I ever made, as a broker. I was talking to one of our agents in Geneva, Switzerland. They had a large client. And so at that time, I can't remember exactly where bond futures were trading. Maybe they were trading in the 70s or 80s. And I recommended that they put on a butterfly spread. It was like a 2-point wide butterfly spread in bond options. And I figured, well, they may or may not take the advice. And if they do, they may end up doing, a 20 lot. Well, they ended up putting on like a 200 lot. and it worked out very well for them. They made a good profit on the trade, and ever since then I was hooked. So I've always been a student of the options markets throughout my whole career.
John Lothian News would like to thank those individuals who have contributed to our Markets Wiki Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.